After 4 years of day trading, I finally decided to stop, and instead I've become a full-time swing trader. And now that I've done that, I've made way more money in a fraction of the time. And to be honest, I think 95% of traders should become swing traders. So in this video, I'm going to explain why I think that is, and I'm going to give you my completely free swing trading model that I personally use, and which I used to make 3K this week. Okay, so why do I think that most traders should become swing traders right now? I've been trading for 5 years. Maybe like 3 or 4 years of that, I made no money. In fact, I lost so much money. And the major reasons why I like swing trading is, number one, you can trade at any time. Number two, you don't have to worry about sessions. So you don't have to worry about, London session makes a fake move, New York session's a continuation. You don't have to worry about any of that. Number three, this is the big one, there's way less liquidity sweep, right? And if you've gone on the lower time frames, and if you watch my channel, you'll know I talk about liquidity sweeps all the time. On the higher time frames, you can get away with it. And the last point, which is by far the most important, it is so much more easier than day trading. I cannot stress that enough. And I will actually show you this trade that I took and how easy it is, right? Okay, so what was the logic behind this trade, right? What swing trading model am I actually using? So let me just clear these charts and I'll show you exactly what the model is that I'm using. So we clear these charts, and for those of you wondering, this is on a demo account this week because, for those who don't know, I lost 150k in prop firm funding because the prop firm lost their license to operate or something. They couldn't use MT5 or MT4. Yeah, stupid prop firms, but very annoying. I'm going to make a video on prop firms soon anyway. But what I do is I always get onto the weekly chart like this. First thing I want to see is I want to see the overall trend, right? This is the weekly chart. The reason this is so important, this is what smart money, big banks, big institutions are all looking at, right? They're all looking at the weekly chart. So for me, I want to see a clear trend, and it is so obvious, at least I hope it is, on the weekly chart that we are bullish, right? We had this little, down move. This was from the Prime Minister in the UK resigning, but ever since then, huge bullish movements, tracements, bam, right up. That's what I want to see. Strong, clear, overall trend of where the market wants to go. And when you find trades like these, it's so easy to make money, right? So easy, so obvious to predict where it's going to go. And for this weekly candle, so the candle that I was trading, we look to the left of our chart. What do we have over here? What do we have over here? Lots of liquidity at this high. Lots of liquidity at this high, which we always like to see. So right here is your liquidity. So once I've got my trend on the weekly chart, I'm going to look for liquidity, right? Now, if there's liquidity on the weekly chart, I'll take it. If I can't find it on the weekly, I'll go on the daily. And if I can't find it on the daily, I'll go on the 4-hour chart. Now, I never go below the 4-hour chart for swing trading. Very important. If you get onto the 1-hour chart, you're in day trading territory, right? So you're gonna have to worry about time of day. There's way more liquidity sweep. So for me, the 4-hour chart has been an absolute money maker, and I think it's the easiest time frame to trade. But now that I've got my direction, now that I've got my obvious liquidity pool, all I want to look for is my entry, right? So at this point here, I know my bias, I know what I'm looking for, I know what my target is. I'm just looking for my entry, so I don't even need the daily chart. I go straight onto my 4-hour chart, and this is obviously the point where I entered, right here. So what I do, and this is my super sophisticated entry, it's all I need to enter is an optimal trade entry. And for those who don't know, all that is a Fibonacci retracement, right? Like this, like that. Stop loss at the low. I target a 3-to-1, fixed, free, risk to reward ratio, like that. I mean, it does not get easier than that. And people have all this, these illusions about swing trading. Oh, I don't want to hold for 4 weeks. Like, bro, at most I hold for 2 weeks, at most. But most of these trades are done within a few days, right? I mean, let's just say, how long was I in this trade for, right? So this was Tuesday. I went, so like within a day, I'd made 3K on this trade, right? And for those of you who are more eagle-eyed, you could probably see. Let me just remove this here. You can probably see another entry right here. I missed. Wow, I was on my prop firm account for this until it went under. So again, here's your 3-to-1. Let me just mark this out, right? Very easy trades, easy bread and butter trades. We've got the direction on the weekly chart. We know where price wants to go. There's no messing around, right? There's no, there's no little liquidity sweeps here, and then our key time is going to chop, and then we have to wait for another liquidity sweep, and then we've got to enter on a fair value gap, and we've got to do all this stuff. We've got to dance around on lower time frames. There's none of that. All we need is the 4-hour chart and liquidity on the higher time frames and the overall trend. That's all you need to make money. So let me go show you another example of a trade that I took. Okay, so here's another trade on euro against the Swiss franc. Now, I'm going to show you how easy the setup is, because this pair has been bearish for decades, literally decades, right? So there are some setups which are so easy. And I don't know what I did here. I must have put a market order instead of a limit order, but this is the real entry here, right? Limit order here, stop loss here, and then target a free risk reward ratio. But as always, I'm gonna get on the weekly chart. I'm gonna look for my overall trend. I'm gonna look for my liquidity target, and I'm gonna look for my entry. So let's get on the weekly chart and see what we can see. Okay, so here we are on the weekly chart for euro against the Swiss franc. Now, hopefully, hopefully it's pretty obvious. We just zoom all the way out. Where has this been trending for since the financial crash, right? Since 2007. Where has this been trending? Yeah, I mean, there are some trades which you'll find, right, which are so easy. And I'll give you guys a golden nugget, right? So if you're watching this, literally any pair, so if you could take euro against the Swiss franc, the Australian dollar against the Swiss franc, or New Zealand dollar against the Swiss franc, if you just short that thing, you'll make money. You'll make money. Get on the weekly chart or even the monthly chart, and you'll know what I'm talking about. I mean, this is so obvious where price wants to go, right? It's so obvious. For decades, this has been bearish. I want any opportunity just to get short on this. So for me, I'm very confident in my bias, right? I'm really confident in where price wants to go. If we just study price action a bit, I'm not too fussed about that. Do we even touch this order block? No, we don't even touch this order block, which is quite bearish, right? The fact that price could not come up and tap this order block is really bearish, right? Really bearish. It tells us that price, it's almost really heavy that it couldn't get up and touch this order block. But what it does do, it stays mostly within this fair value gap. I know we wick out of it, but the bodies are in this fair value gap. But anyway, for me, I did not even care about this in my analysis. I went straight to daily chart to look for my liquidity, and it wasn't that clear for me on the daily chart. But if you go on the 4-hour chart, it's pretty obvious where price wants to go, right? And this overall, by the way, for those who are wondering, this is just a liquidity sweep, right? So this is just a fake move in the trend, right? Generating some liquidity. Price comes up, takes out stop loss orders around here, and even here into this fair value gap, order block area before continuing lower, right? That's what price does, because as we all know, price does not move in straight lines, right? Smart money are gonna have to take out stop loss orders in the opposing direction to the overall bias, so they can actually get into the move, right? That's why liquidity sweeps work, right? That's why it's actually important. But anyway, if we go into the 4-hour chart, all we need to do, or all I did with my entry. Now remember, I'm very confident in the direction of the market, right? I'm very confident in the direction of the market. This isn't the 5-minute chart, this is the 4-hour chart. And if you remember, the analysis is done on the weekly. So I'm looking for any opportunity to get short in this trade, right? So I put my Fibonacci here, like that, stop loss orders here, and I'm going to target a free risk to reward ratio, like that. Beautiful trades, beautiful trades. These are the best bread and butter setups that you want to be in. When price comes up, it wicks into your entry around here and then drops straight to your take profit. Does not get cleaner, and it does not get nicer than that. They're such a joy to be in, and they move so fast, right? Okay, so here's an example, live in price action, right? So as I'm recording this is live in price action, and it's on crude oil. It's on crude oil. So if we just clear the charts, what we're going to do, first thing we're going to do is we're going to look for the trend on the weekly chart, right? And for me, it's so clear, right? There are some markets where it's so clear where price wants to go, right? Now you might be thinking, if we just make this a bit bigger, what has price been doing on the weekly chart, right? What's it been doing on the weekly chart, right? So we've had this move here, price comes down, comes up, comes down, respects the bearish order block, comes down, respects the fair value gaps and order blocks, comes down. Has there been any respect of any bullish order block and any fair value gap here? No, not at all. Here's our liquidity around here and at these lows here, right? Very clear, very obvious trend. And if you get on the daily chart, and just to make it a bit more obvious, because it is kind of choppy, if you look at the daily chart, right, price wants to go down. It wants to go down, and there's so many lows, right? If we just look, there's so many lows, here, there's so much liquidity at these lows here, right? So if we go into the 4-hour chart, like this, we zoom out, where's the liquidity? Where is the liquidity? It's right here, right? Right here, or even here, is your liquidity, right? And where is price going? Straight for this low. So if we just mark this out, this is our liquidity. This is our liquidity. Right, and for those who don't know, liquidity is simply stop loss orders. That's all it does. All price will do, and this is so important, all price does is target stop loss orders on the higher time frames, right? Price is not moving for the 5-minute, it's not moving for the 15-minute, it's only moving because of the higher time frames, right? The lower time frames are mainly driven by algorithms that are trading. right? Really important that you understand that. The price only moves for higher time frame stop loss orders. So smart money, big institutions can get in and out of their positions. That's it, nothing else. So here's our liquidity, right? Here's our clear, obvious target. Now for me, I just want an optimal trade entry. Now, am I going to get it? I don't know, hopefully. Hopefully, but crude oil tends to do that, and you can probably tell it here, right? It goes bearish, and it slowly chops up, and then it drops like a brick, right? So let me just mark this out. What that would look like is just that'd be a limit order, like this. Target a 3 to 1, like this. And what price should do, or at least hopefully will do, is it will slowly come up. And it's not, as I'm recording this, it's non-farm payroll, so price could shoot up, wick into this, and then reverse. Or, alternatively, what it could do, let's just do this. What it could do is it could just smash right through these lows. And if it does that, there's no trade. There's no trade, which is trading reality, right? That's the reality of trading. Sometimes you're going to get the direction right, you'll have your limit order up, and price will just go straight to your take profit without giving you an entry. That is realistic trading, and that's what you will expect. Okay, so that's why I decided to become a swing trader and not a day trader, just because it was easier and, you know, I could fit it around my schedule, right? I don't have time to be at the charts all day, so swing trading is easy. If you've got a 9-to-5 job, I strongly recommend to become a swing trader, right? I tried day trading and scalping, and it was very, very difficult. Now, let me make this very clear. You can become a day trader, and you know, you can become a profitable day trader. It's a lot harder, right? And for me, I got into trading just to make money, and I've profitably day traded. Others have. You can do it too, but I just think at this point, swing trading is so much more easier, and it's so much more peaceful. You can set your limit orders up, and you can move on with your life. But swing trading alone is not going to be some magic pill that's going to make you profitable, right? To become a profitable trader, you first need a working edge, which we talked about in this video, but you also need a working mindset to go with it. So make sure you go watch this full 7-minute video where I break down everything you need to know about trading psychology condensed into one video. So I'll see you in that video on screen.